Well. You may have number of SIPs, 6 SIPs, 3 mutual fund apps, NPS account, and a growing portfolio, stocks, bonds. You thought of real estate. But can you tell me exactly what each investment is meant to achieve? If not, your problem may not be investing. Your problem may be architecture. So all your SIPs are running every month, and you know exactly what each SIP, systematic investment plan, is meant to achieve. You may have your own active funds and passive funds, but do you know whether your asset allocation itself is right? How much should be in debt, equity, balanced? You may also be searching for the best NPS fund because you thought of retirement. But do you know whether your retirement is adequately funded? You may follow market trends every day. Or do you know exactly what you will do if the market falls by 30%? And perhaps the most uncomfortable question, you may have more financial apps, more funds, and more information than ever before. So, why does your financial life still look fragmented? And you're wondering, am I doing good? Here's what I believe: the problem may not be that you are investing too little. The problem may be that too many financial decisions are being made separately. Four problems. Let's identify. Stay with me till the end. Hi, I'm CFP Taresh Bhatia, certified financial planner, author of the Amazon bestseller book The Richness Principles, and founder of The Richness Academy. For more than 37 years, I have worked with Indian individuals, families, entrepreneurs across different stages of their financial journeys. And in this video, I want to show you four problems I increasingly see, even among intelligent, successful, and disciplined investors. And more importantly, I will show you one solution that connects all four of the four problems. Problem number one: SIP is not a financial plan. SIP शुरू करना financial planning शुरू नहीं करता. Let me begin with the most important thing. When you thought of starting your investments, SIP करना financial planning नहीं है. Did somebody tell you that? No. A SIP is a mechanism, a useful mechanism. It can create discipline, it can automate investing, but it cannot tell you how much to invest, for which goal, for how long, to review when, with what asset allocation, or what happens if your income suddenly stops and you're not able to continue, or you think you cannot continue your SIPs. I once asked an investor what is what his different SIPs were meant to achieve. His answer? So, all are long term. But retirement is long term. Your children's education fund or a goal may be long term. Financial independence for many is long term. Buying a future home may be long term. Then, same words, long term. I'm doing good. But different liabilities, different dates, different exit and entry, different consequences, different strategies. If you want to be successful in your investments, what's the solution? Here's the solution. Every SIP should have a job. For what particular purpose? Write it down or label it. Before asking which fund, ask what exact outcome this money is meant to fund. How much will be required and by when? Three questions you ask when you're investing that SIP. If you're not done, answer it now. Automation creates discipline, no doubt. Purpose creates direction. Problem number two: people feel active is good, passive is often the wrong debate. Now consider another debate: active or passive. That's what some financial influencers start a debate. Investors spend then enormous time debating. Let me save cost, alpha, benchmarks, fund managers, tracking difference. All of these matter. But suppose your asset allocation itself is wrong. Suppose money needed in 3 years is taking a risk meant for 20 years, or money meant for 20 years is sitting too conservatively because of fear mindset. So, will choosing the cheapest fund solve all these problems? No. Will choosing the highest rated active fund solve that? Again, no. Low cost cannot repair wrong financial architecture. What's the solution? So, I would begin with first ask, what is this money for? When will I need it? What risk can this particular goal afford? What role should this asset play in my overall financial life? Then discuss active or passive. Clear? Very simple. Stay with me because I'm going to make it very simple. This is a live telecast. Let me continue. So ask first the job, then the strategy, then the product. Problem number 3. The best NPS fund cannot fix an underfunded retirement for that matter. Now, retirement. People search for the best NPS fund, the best pension fund manager, the number one performer. But imagine identifying the top performing fund while your investments for retirement itself is underfunded. Suppose you expect to you need 2 lakhs a month as of today in future retirement income, but your current contribution trajectory may support far less. Why? What exactly did the ranking solve now? That fund you chose for retirement, what went wrong? The best performing NPS fund cannot rescue an underfunded retirement strategy. What's the solution? Reverse the sequence. First, calculate the retirement requirement. You need a professional to guide you on that. Then, the contribution adequacy. Then comes inflation. Then comes longevity. Then comes asset allocation. 5 factors. Then the future income strategy, sixth one. And only then product selection. Because you need to know how much you're going to live, short or long, and your spouse, inflation, white good replacement. So, retirement outcome first, retirement product later. Problem number 4, confidence versus overconfidence. The fourth problem is behavioral. Why? Mindset. More knowledge can create confidence. That is good, but sometimes, particularly in a rising market, confidence quietly becomes something else. Overconfidence. One successful stock, one profitable trade, one good year, one fund that no, underperformed, outperformed. One fund did very good in your opinion. And suddenly, prediction begins replacing preparation. The investor starts believing, I know what to do, I know when to enter, I will exit before the next fall. I understand how the markets behave, what the markets will do next. But true investor, true investor confidence is not saying, I know what the market will do. It is saying, I know what I will do if markets rise, fall, remain volatile, or disappoint me. So, prediction creates excitement, preparedness creates resilience. Let me come now to the big solution, which I promised in the beginning. Now, connect all the one, two, three, four problems together. The four problems: SIP without clearly defined jobs. Number one, product debates before asset allocation. Number three, retirement rankings before retirement adequacy. Number four, confidence without preparedness. What do they create, these problems? Perhaps fragmentation. Perhaps your confidence now goes low. Perhaps you do start thinking. So, what is the answer? The answer is not fewer investments now, not fewer, not more investments, not another app, not another Excel, not another ranking, not another research. It is better architecture. Connect your purpose, goals, emergency liquidity, protection, asset allocation, investments, retirement, and family continuity. Eight factors now come together. Why? Because your SIP should not live separately from your goals. Simple. Your asset allocation should not live separately from your time horizon. Your NPS should not live separately from your retirement requirement. Your investments should not live separately from your emergency liquidity. And your entire financial life should not depend on one family member knowing everything. Think about it. Information without architecture creates fragmentation. And financial activity is not the same as financial progress. What this solution can actually help you to: a connected financial architecture, a financial structure can help you identify which SIP has no clear purpose, identified, which goal may be underfunded, understood, where investments are unnecessarily duplicated, where funds may be, where you may be taking more risk than you realize, whether retirement contributions are actually adequate, whether emergency liquidity is sufficient, whether your family can understand and continue this system if you're not available, incapacitated, or not available at all. This is not about owning more products. It is about making better decisions with what you already have. You may ask, Taresh, why should people trust me? Now you may have reasonably, you may ask me reasonably, why should I trust this perspective, Taresh, you're given? My answer is simple. Not because I can predict markets. I cannot. Not because I know which fund will rank number one next year for sure. Nobody can. Nobody can know nobody can know that with certainty. Not because one formula fits every family. It does not. I'm CFP Taresh Bhatia, a certified financial planner, professional, MBA, author of the Amazon bestseller book, The Richness Principles. Buy it now. And founder of The Richness Academy. For more than 37 years, I worked with Indian individuals and families, entrepreneurs, businessmen across earnings, investings, retirement, protection, family responsibilities, and major financial transitions in their life. And that experience has taught me one thing repeatedly. Most people do not suffer from a shortage of financial products. They suffer from a shortage of connection between financial decisions. So here's my challenge to you. Open your app in the mobile tonight. Look at all your SIPs. Then look at all your mutual funds. Then look at your NPS, your stocks, your deposits, fixed deposits, bank deposits, your insurance, all your insurance, life, health. And ask one question. Are these financial decisions actually working together or merely existing together? If they are clearly connected, right? Connected in the comments. If you feel like separate decisions accumulated over the years, write fragmented in the comments. And if you really want to, examine whether your own financial life is truly connected. Start your structured financial orientation. Go to the website tareshbhatia.com now. I'm CFP Taresh Bhatia. The goal is not to become a busier investor. It's not to make things complicated. The goal is to build a financial life where your money has directions, your decisions have structure, your family has clarity, and every major part works together. Plan today, protect tomorrow, prosper always. Wishing you the best of luck for your best of financial life. Thank you.